Where do you think there was or there is over optimism? What are the opportunities for one to book out, and where do you think are the opportunities for one to invest in the current space?
I think current environment, we all know that IPO markets are little subdued. So public markets is not the best window for exit right now, but I think there's enough private capital in the country, and even public companies which have a strong view on consolidating their position are very keen acquirers of businesses.
Welcome to Navigate with HSBC, where we spotlight insightful people and perspectives shaping the world of investing. From market outlooks to emerging opportunities like AIFs, we go beyond the headlines to help you make sense of what's moving in the investment landscape. Today, we're in conversation with Sumeet Narang, who's the founder and managing director of Samara Capital. Sumeet has played a key role in building businesses that drive real long-term value. Sumeet, thank you so much for being a part of this conversation.
Thank you so much for having me over.
Where do you think there was or there is over optimism? What are the opportunities for one to book out, and where do you think are the opportunities for one to invest in the current space? Are there any risks and opportunities which the street is perhaps not looking at, according to you?
I think in our own case, coming out of COVID, as markets presented a very good exit opportunity both on the public and private side, we had many exits starting calendar year 22 to 24 and monetized 6-7 investments. I think current environment, we all know that IPO markets are little subdued. So public markets is not the best window for exit right now, but I think there's enough private capital in the country, and even public companies which have a strong view on consolidating their position are very keen acquirers of businesses. So I believe there'll be enough private to private activity, and even public companies as big source of exits for the private equity venture capital industry as they look to consolidate their industry position by using cash on their balance sheets.
Are there any fundamental shifts that you're seeing in flows or valuations in the private market because of what has taken place? Exits getting a lot tougher. Do you see a little more in terms of distressed sales? Do you see multiples coming down from what they were, and how do you foresee the PE industry?
So I think within private market, there is the early stage VC, tech growth capital, and regular private equity, both minority and buyout.
Yeah.
I think the behavior in these four has been slightly different. I think a lot of minority growth capital investments were reliant on the IPO markets for exit. I think there again, maybe 10-15% of the companies in that ecosystem will go public. Many others, I think, will rely on private market exits. And I think that's why there has been a very strong rise of what I would call direct secondaries and private to private sale from one firm to another, or one firm to a group of limited partners acquiring a portfolio. Second, I think, as I said, strategics are very keen, and it will be a very big source of deal flow for strategics where businesses can't or don't have the size and scale to go public, but they are a very good fit with a strategic. So I think the M&A activity will materially increase in the private market as a source of exit.
How does private equity offer differentiated opportunities compared to public markets or traditional AIFs?
So I think there are three levers in private markets that should lead to higher return than public markets. First and foremost, I think, is the illiquidity premium.
Yeah.
If you ask any investor that you have to invest and you will not have liquidity for 7 years versus investing somewhere else and you will be able to redeem it monthly, any investor would say, I need premium. So I think the asset class gets priced so that there is an alpha for the illiquidity.
Got it.
And I would say that is one component. Second, I think the way private markets are structured, you are not forced to be fully invested at all points in time.
Right.
So I think when you are not forced to be fully invested all the time, you can time the purchase basis when markets are overvalued or undervalued basis that firm's view. That's the second lever. The third lever is, I think in private markets, access to information and diligence is it to a very different level. And I think if you can use that to your advantage, one, you have enough time and materially more information for analysis and forming insight. So I think combination of illiquidity premium, ability to put capital when you can,
Yes.
and third, deeper diligence, leading to a little more concentrated portfolio, I think are four components. And if you see 3 decades of track record in the US markets as well, when the alternatives rose, I think there has been a 300 to 500 basis points alpha generated. And I think maybe in a single year, it doesn't look such high. But I think if you compound that 400 basis points over a 7-8 year period, it's a materially strong multiple of an investment enhancer. But I think this is meant for investors who can have part of their portfolio illiquid and more for compounding of wealth and being comfortable with that.
That was so interesting. Thank you so much, Sumeet. It was a compelling deep dive. Thank you for taking your time out and more importantly, giving us honest insights around, the grounded take on markets as well as the investment space itself. And to our viewers, we have to tell you, thank you for being a part of this conversation. We'll be back soon with more voices, more ideas, and more to think about on another episode of Navigate with HSBC. Thank you for tuning in.